Hello everybody, we had another volatile day in the market and I am with one of my favorite people in Wall Street, Peter Tuchman from Wallstreet Global Trading Academy, a trader at the floor of NYSE, New York Stock Exchange. How are you, Peter?
I'm great. It's an honor. It's great to be with you.
Thank you.
On these days, right? These are the days that change the world, right? This is the day we need to get people's attention to explain to them how you navigate through this kind of volatility. Because everyone thinks it's a down day, it's a bad day. Or it's an up day, it's always a good day. It's not the case. It's for you and me to explain it to them.
It's a crazy day for trading. I mean, this is, I'm not an experienced trader as you are. I don't remember volatility in 2008 or during 2001. I'm sure you've seen it all. How do you see the market? I mean, the pandemic was a short period of the volatility, but this volatility, this crazy moves ups and downs because of inflation, interest rates. How do you see trading in this market?
I really think that's why I attacked you yesterday on your video, because I think that people need to understand that the volatility, I always say this is not your grandfather's stock market. So the mechanism, the landscape, the environment, the participants who are in this market that came along at COVID, the 40 million new retail traders, the big investment, the big institutional investors. It's a different landscape, a different environment. And I think the mechanism of the economy, why I keep saying there is no recession and that everyone blames the president for the inflation, I blame the pandemic for the inflation. And so it's not a matter, we don't gain from the blame game. That doesn't put money in my pocket. And I know there's a lot of chatter. People who are not successful day traders love to blame someone for their not success, for their lack of profitability. And they always blame the market maker because he sees my stop orders, or he blames, the president, or he blames the Federal Reserve and all that. Blaming doesn't put money in your pocket. It doesn't teach you anything. It spiritually blocks you from trying to understand how to navigate this successfully, right? I hope everyone makes money and does good things with their money, but they have to stop losing money. And I know you are probably reached out to, as am I, by an amazing, huge retail community who are getting blown up, right? They fall in love with a position. They think, oh, they don't want to miss the bottom. They buy into the hype. They buy into the hope. They buy into the FOMO. They get involved. Bad luck. I guarantee you there's a whole new generation of people who missed the pandemic and the meme stock phenomenon, thinking everybody made money during that, net realizing 90% of people lost money doing that, and they got back in, or they stepped their feet back into the crazy meme stuff. It just happened today with this HKD. It happened last week with BBBY. I say all this to say that I've never seen this kind of volatility, whether it's happened for the last 2 years or whether it's happened in 2022. The inflow, people don't understand. They see up 1,000, down 1,000. We get jaded to the fact that these are actually, yesterday, $1.2 trillion value was taken out of the market by the 1,300 point sell-off in the day. That's a lot. That means that flows coming out of funds, people selling stocks, and the value of those companies went down. Then you have the days that we go up 1,000 points. Who's doing what to who? Then we have the days where in one day, I always say that we need to restructure our terminology, right? You can't, the relevance of a bull market, bear market, inflation, recession, terms that we have been using for decades because of the old economic cycle are no longer valid, in my opinion. If at 11 o'clock we're in a bear market, then the market by 3 o'clock we're in a bull market, right? This volatility has changed the landscape, changed the environment. So I don't want people to get wrapped up in the terminology and the blame game, calling this market one thing or another. It doesn't do anything for you. It doesn't empower you. It doesn't give you confidence as a trader. It doesn't do anything. If you hear, they're pumping the recession story over and over and over again. Well, what does that mean? We've seen over decades that when everyone else is, that the crashes that we've seen, 87, 2000, 07, 2020, were net better buying opportunities than selling opportunities. we are being pumped to get emotional about money, and people who don't have experience in the market hear all this chatter on media, on Wall Street Bets, on Reddit. They get anxious. They get excited. The consumer confidence is really low, so they sell. That's a mistake, right? People who get into the market as a trader, trade because some guy on the internet told them to buy it. Right? That is the biggest gag in the world, and since the beginning of time. That's the Jordan Belfort pump and dump idea, right? There are thousands of people. You are one of the great teachers, educators, and traders who have good motivation. I'm hoping to be that person. But there are a lot of bad actors in the space. People who have huge communities. They charge them $8 a week, a month, to give them trading signals. And we know what they do is they go out and buy the position first. Then they go out to their 5,000 people in the community, tell them to buy it. They give them the signal. And when they're all buying it, they're selling it. Okay. So
that's
anyway.
Great. Thank you so much, Peter. I have a question for you. By the way, Peter has a course, Wallstreet Global Trading Academy. Google it. He has a really amazing course and teach some of the most important elements for trading. And I think one of them that I want to emphasize is risk management. So this market is all about risk management. But before getting that, I want to say something about it. I had $1 million loss in this market. And I listened to one of your videos that you mentioned that you cannot live the life looking in the rear mirror. You have to always look forward. Stop blaming and just keep moving forward. Peter, I want to ask you a couple of questions, and I want you to answer it shortly. Do you think inflation has peaked or not?
Okay, so it's not an easy question to answer. Okay, if you use the old standards, right? So we're seeing these CPI numbers. We're seeing the PPI, CPI, and PPI numbers. We're seeing, I don't know if we have enough new historic. Look, I'm a firm believer that the world changed on March 23rd, 2020, okay? When the market on February 12th was trading at a record high, the consumer was in a very strong, comfortable place. The bank's balance sheets were super strong. The indices of the market were trading at record highs before COVID. And over the next 6 weeks, we saw the market crash. Right, 10,800 points in the Dow, 26% in the S&P 500. The world changed that day because of a world pandemic. It changed everything. It wasn't an ordinary crash. It wasn't an ordinary crisis. The globe is so interrelated. People were dying everywhere. We went into a economic global shutdown due to sheltered in place to protect us against COVID. But what did the world have to do to protect themselves for the other side of this crazy experience? Well, they had to shut down business. They had to give stimulus. They had to figure something else out. And so I think that the whole dynamic and the economic mechanism of the world changed on that day forever. And I don't think we have enough evidence now to figure out whether we know we're in an inflation. And I know the inflation was caused by pandemic. Why is that the case? Because all the companies had to shut down. Look, no one was getting on a plane, a train, or a cruise ship. Nobody was going to the movies or restaurants. Nobody was going to the gambling arenas. No one was doing anything. They were at home with no job, receiving a check from the government, at least here in the United States. The companies that support us, right, actually got sold off very hard. They had to the lumber companies. They stopped cutting trees. They stopped making lumber. The gas companies, they stopped production, and the oil companies stopped working with oil. Right? Every company, to protect themselves, had to shut down business. Okay, they had to shut the supply chains. They had to do everything they had to do. And so when we finally are coming out of the pandemic, in order to get back on, and then then this bizarre phenomenon, nobody wants to go back to work. So you have a workforce that doesn't want to work. You have to pay them a lot more to do it. These companies were offline for 2 years. You can't just hit a switch and suddenly grow trees, cut trees, and make lumber. It doesn't happen overnight. So and I'm just using lumber as an example, but all the companies that shut themselves down, they went into hibernation to protect themselves for the other side of this world, had to turn the switch to go on again. Well, that doesn't happen overnight. It may take 5 years to happen. So all of these things were a perfect storm causing the price of goods and services to go up. That's where inflation came from. You don't blame the Federal Reserve. You don't blame poor Joe Byron. You don't blame anybody else. The pandemic caused this problem. Has it peaked? I kind of think, look, it's very funny how the media love to pump the story of inflation when gas went to $5 a gallon, right? We are down 84 days in a row. Gas is now $3.47 a gallon, and we haven't heard one thing about it that, oh my God, what a great turnaround, right? That's a key component of inflation, right? One of the other keys is the workforce, the labor force. 40 million people quit their jobs in the last year. I don't know how they're making their money and supporting their family. The trucking industry offered up $50,000 bonuses and $65 an hour to bring people back to work. So I'm saying all this to say it's a very complicated puzzle. Yeah, I believe inflation has peaked. We are paying more for food, but that's the nature of the business. At the end of the day, it's also important to look perspective. Okay, I post this very often. There are 171 companies in the world. The U.S. is the fourth cheapest gasoline in the world. There are 171 countries in the world. The U.S. on the inflation scale is one of the least. Spain, 19%. Eastern Europe, 27%. So we need to understand that we're in a new world. We're just coming out of a pandemic. The world is very interconnected in economically, globally, health-wise, and business-wise, okay? And yes, things are more expensive. Some people are struggling clearly, right? So we need to just understand it and kind of hunker down. Would we love food prices cheaper? Yes. That's going to take a couple of cycles, right, before that happens, right? Gas is coming down. The price of houses has peaked, it seems like. So in my opinion, I think we're rolling over. Look, I'm not the smartest guy in the house, right? I'm just trying to analyze it the best way I can. That's why I came in, because I didn't think I don't like the use of the word recession. It scares people, right? One of the biggest components of recession is massive layoffs. Well, we don't have any layoffs. We have an unemployment rate that is in good condition. We have 11 million jobs that nobody wants to take, right? So we're going to have to match them up. So
that's my next question, Peter. Do you think to control inflation, the U.S. Central Bank, Federal Reserve, has to take the economy into a recession or depression to cool down the economy and bring down the inflation? Or you think they can have the soft landing, controlling the inflation without raising the unemployment? Do you think it's possible?
You know what? Look, I am not an economist, and I'm still trying to understand the mechanism of how this works and all the different things. I go on some social media, Twitter spaces, and I hear guys from Wall Street who know the ins and outs of the yield curve and about all the stuff that the Federal Reserve and raising interest rates does and that whole landscape and all that. I'm not that. I may look like Einstein. I'm not that smart. Okay. But and I'm not sure that raising interest rates are obviously the goal. Raising interest rates is to pull money out of the system and get people to stop spending so much. Okay. Right. And then maybe that will roll over and help inflation and not cause a recession. I don't understand the dynamic of if you raise interest rates enough, then we're going to cause a depression and a recession, and that's the only way to curb inflation. I don't know the answer to that question because I don't understand that dynamic.
So the volatile market that you said, it's nothing like what we did before. Do you think the new traders who are entering the market, should they be worried about this bear market? What's your recommendation and suggestions to the new traders, to-dos and not to-dos for the new traders?
Okay, great question. Thank you for the question. We're not talking about investing community. Net over time, markets go up. Every crash that we've had over the last 4 generations have been better buying opportunities than selling. I'll say enough about that. As a trader, the definition of as a day trader is trying to make small bits of money over and over again in a day. So you make 100 a day, 500 a week, 2,000 a month. That's the goal, right? Never have 4 winning trades and 1 losing trade, when on the winning trades you made $400 and on the losing trade you lost $8,000. That is not a sustainable trading model. The day trader, 88% of day traders apparently blow up their accounts and go belly up. They don't know what they're doing. The rules of being a successful day trader are very clear. The mistakes that unsuccessful day traders make are all the same. They buy a stock because they hope it will go up. They buy a stock because they think it cannot go any lower or cannot go any higher. They buy or short a stock because Uncle Herbie on the internet told them to do so. They buy a stock because of FOMO, because it's a meme stock and everyone rushed in to buy it, and they buy it at the top and it goes straight down. They buy a stock, and if it goes against them, they average into it, hoping at some point it stops going down and going up. They buy a stock or short a stock and use a mental stop order, not a real stop order, because they're afraid that the market maker sees their stop order and is going to change his billion-dollar business because of some poor day trader.
Is that true? Is this myth true, Peter?
No, horseshit. Excuse me. It's not true. The market makers I've been working with for 40 years don't care. They don't see your stop orders. They are trading billions of dollars. They don't care about stop retail market. They love you, but they don't care about it. It's not what they're focused on. As I said before, people who are unsuccessful trading try and find a conspiracy theory that someone's out to get them, and that's why they're losing money. They are losing money because they make the 5 critical mistakes that people make. Average into a bad trade. Do not use a stop order. Do not have a plan when they get into a stock. Trade proactively into news, Federal Reserve headlines and earnings, not reactively on price action. And fourth, because they don't use technical analysis. Technical analysis will put the probability in your favor that you will win more times than you lose. A stop order will identify how much money you're going to lose before you get into the trade. If I buy a stock at $50 because it's for one reason and one reason only, because it sets up technically, not because Uncle Herbie told me to buy it, not because everyone in the world on Reddit's buying it, okay? Not because I think it's going up, not because the earnings are going to be good and I hope it goes up, all the wrong reasons. I buy or short a stock for one reason, because it sets up technically. The minute I buy the stock, I put a stop order in up or down 1% from the price I bought it. If I buy a stock at 50 because it sets up, because it hit one of my moving averages, because the RSI is correct, because it's in a trend and it's moving back to my EMAs. The minute I buy it at $50, I put a stop in at 49.5. If it goes up to 50.5, I take off half of my trade for a 50-cent profit. I raise my stop order to break even, so I can never turn a winning trade into a losing trade. If it goes to $51, I sell 25% more of my trade for $1 profit. I raise my stop up to lock in a half a dollar profit.
Amazing.
And then I get the most, and I use a trailing stop to get the most out of my winners and lose the least out of my losers. People don't like to accept a loss. They buy a stock at 50. They don't use a stop order. It goes the wrong way. First of all, if it goes up, they don't take a profit because they think they have diamond hands. It's going to the moon. And they watch a winning trade. It goes to 51. They go get a coffee. They come back, it's trading at 48.
That's amazing. That's trade management that you said. It's the number one elements that really distinguish winners from losers. I love that. The trade management that you mentioned, the detail. I mean, I don't know how this information is, you're sharing it for free and people don't get it. This amazing trade management that you did. Peter, you have this information in your course. I know you have a course. Do you have this trade management, risk management in your course in the Global Trading Academy?
So guys, we have a course called Wallstreet Global Trading Academy, WSGTA.com. We're having a live free webinar next Wednesday. If you go to the link in my bio on my Instagram, Einstein of Wall Street, we are going to have hundreds and hundreds of people next Wednesday at 7 p.m. called the Double Emergency Webinar, trying to help people navigate the volatility. We teach the language of the stock market. We teach risk and money management and trade management, exactly what I described to you. We teach you about your chart setups. We help you set up all the things you need in your charts, the EMA, RSI, and pivot points, keeping it simple. We teach you the 5 trades of technical analysis: a trend trade, a moving average trade, a far from moving average trade, a double top, a double bottom, and a swing trade. We teach you how to get in. We teach you how to get out. You will never ever blow up your trading account using our strategy. We did not invent it. We just kind of curated it to keep it simple, because I know a lot of people, as I said, the mistakes that unsuccessful traders make. And there are 40 million new traders. Now, look, I've made the mistakes myself. I still make them. I'm no better than you. I've just been here for a long time. And I know I'm so happy that you've all been invited to this stock market after 100 years, right? The good thing that happened after COVID was the democratization of the trading community. 40 million people were invited to be traders. Everyone with an iPhone and $100 can trade the market now. But everybody who got in the market on March 23rd, 2020, who got into GameStop and the AMC and whatnot, who thought they were millionaires, most of them are not. A few made some money. Most of them blew up their accounts. Don't know what to do in a volatile market. If a market's just going up, look, anybody can make money. But in a market that is up 400 points at 11 in the morning, it's down 1,000 points at 1 o'clock, and then it rallies 1,000 at 4 o'clock, that is really hard to trade. You're going to be right for $1 or wrong for $50. And I don't think many people in the retail space have the risk profile to take a $50 loss on a trade. So I want everyone to look. I've taken it upon myself with my partner, David Green. We have Wallstreet Global Trading Academy. We have a course. It's $299. What we do that's different is everyone who buys the course, we mentor and coach every Thursday night live. All the students get a Zoom invite, and we're with them every Thursday night to go over the course in person.
I love that, Peter. Where do you get that much energy? I love that. Where do you get that much energy? I love that. You're my hero. Guys, definitely, I put the link into the comments as well. Definitely go check it out. What do you think about crypto markets? It has been very choppy these days, with going up and down. Really can't make a move up there, down there. It used to be really volatile, good for trading. A lot of technical analysis was working on it. What's your thought on crypto trading? Because not everyone can have access to US stock market. A lot of people are interested in crypto market. What's your thought on that?
So I don't have an opinion on whether crypto is a good investment and it's going to go up or down. However, what the wonderful thing about crypto is, it works beautifully with technical analysis, but it is very volatile. Okay, you have to realize that when you're in a instrument where there are very big players in the game, it's like oil, right? We have 5 countries in the world that are the largest oil producers in the world: Saudi Arabia, Venezuela, Iran, Russia, US. Okay, they don't call me. People would say, well, do you think oil's a good trade? Right? And I'm going, I do not like to get involved in an indices or an instrument where the big players in the game can make a decision without calling the Einstein on Wall Street. When Saudi Arabia decides to put 1 billion barrels a day back into the market, I don't know about it, and that's going to impact the market. So there's a lot of smoke and mirrors in that. I don't know what Iran will do. I don't know what Venezuela will do. I didn't know that we were going into a war, or should have known, with Iraq, right? So the same with crypto. A lot of the wallets are owned by a few people who have big positions. What I've learned from the crypto market is it follows the charts just like the equity. You can take Bitcoin and Ethereum. You can take a lot of the offshoot stocks like MARA, M-A-R-A, which tracks Bitcoin to the letter, and you plug them into your technical analysis and they work. But you must follow all the rules. Crypto does not have special rules. If you buy it because it sets up technically, you must use stop orders. And when you're profitable in the trade, you must start taking profits immediately, and you raise your stop up to protect your downside risk.
I love that, Peter. You said something that it shows how professional traders think and behave. You know, you said that I have no opinion about the economy. I have no opinion about the crypto going up and down. I'm a trader. I look at the technical analysis, I look at my risk management, and I make that decision. That's amazing. This is the definition of a professional trading. You're not marrying to your position. Your bias doesn't enter your trading. You're just looking at the technical analysis and the strategy that you're having, and you're doing that. This is amazing. I learned that a lot from you. You're so humble and at the same time so confident that say, I don't know about crypto. This is what I think about the technical and risk management. Same as the stock market. This is amazing. So you mentioned the next Wednesday at 7 p.m. you have the emergency meeting webinar. Is that correct? Next Wednesday, 7 p.m.? Yeah, I highly recommend that everyone, guys, to attend. Peter, now another question. I know you can't say that for sure, but you mentioned that this drop is good to shake out all the over-leveraged people. Where do you see the market in the next 3 months by the end of the year? Right now, we are around 20% down on SPY and 27% down on NASDAQ. What do you think market closes at the end of the year? Just hypothetically, I know nobody can predict the future. I just want to know your opinion.
Okay. First, relative to what you said before, you must not, if you are a day trader, you must not have an opinion about a company or a trade or news. Opinion should be taken out of the equation, right? Don't ever get emotional about it. You are there to trade. That's your primary purpose. If you have an opinion about it, you're already in a bad trade. Now I'll forget it, but let's move on. Okay, one little bit of information, which is actually a wonderful little tidbit, is that 7 times over the last 2 generations, when the market in the first 2 quarters has been down more than 15%, 7 times out of 7 times, those years, the market closed up more than 20%. Okay? That's a wonderful little tidbit. I'm not predicting that will happen this time. But my gut is, first of all, look, the market is not tracking the economy, right? Right. The market is a mind of its own. The people who are look, let's go. Sometimes markets and economy go in concert. Sometimes markets and economy go different. Think about it during COVID. The global economy was shut down, zero, nobody doing nothing, sheltered in place, living at home, nothing to do. The only stocks that went up in the beginning were Zoom and Peloton and the stocks that benefited our life in quarantine. Okay? So at the end of the day, sorry, I just got a little...
So you were saying market is forward-looking. Sometimes the market is forward-looking. You might be deep into the recession, but the market is going up because you think about the future.
Correct. So thank you. You reminded me what I was saying. So right now, I think there's a lot of enthusiasm. People are trying. They don't want to miss the bottom. They don't want to miss the dip, right? And my opinion is the market tells us what it thinks of the information. It gets very hyper-focused. The market last week was up 450 points. We had a little bit of a rebound rally. And then Jay Powell was at Jackson Hole. He said 2 things, and the market reverse went down 1,000 points. What he said that day that made the market reverse was nothing new. We knew it all, but it was all the eyes were on it, and we were hyper-focused like the market had ADHD. Okay, yesterday, there was a lot of expectation. If we had been told that yesterday's CPI number was, we weren't sure is it going to be up or down, whatever, then there wouldn't be big expectations into the announcement. All eyes were on the CPE number. The numbers were not that bad, but the expectations were so high that the reaction was so overdone. Look, today was a volatile day. We sold off 200-300 points, but I'm going to look at what where are my glasses? We were green most of the day. Then around 3 o'clock, the market sold off pretty good, and then we rallied back into the close. So look, if there was a real feeling that we were in deep trouble, I believe there would have been a big follow through on the downside to yesterday's sell order, right? Today the market is trying to get its footing, right? And I think that at the end of it, I think there's going to be a bit of a lip. Okay, without having an opinion, I kind of feel we're going to rally into the end of the year. How's that?
I love that. Thank you so much. One last question. Again, what do you think about Elon Musk and Twitter? Does he have to buy Twitter at $54.20, or he can get out of it? I know nobody knows. I just want to know your opinion.
So, you know what? I think I would be remiss if I made a decision or had an opinion what Elon Musk will do, because as much as he is an incredibly bright man and has built a lot of great things, he's sort of an oddball guy. He's a wild card at best, right? So surely if I say something, I don't know him personally. I met his mother once. He could pull it. Look, did anybody think that the trajectory of this story was going to end with this? Right? You know, the way he handled Tesla, the way he recommended crypto, the way he got involved in Twitter, the way he started dropping things, the way he took over Twitter, then he backed out. At best, all we know is that he's indecisive about this, whether maybe he's all playing us all, right? Or he's just a quirky guy and he decides when he wakes up in the morning what he's going to do with his billions. So I have no opinion.
He is a surprise. Peter Tuchman, guys, he has been on the floor of New York Stock Exchange since probably 8 o'clock in the morning. Right now it's 5 p.m. Look at the energy that he has. He's speaking with us right now with this energy. Peter, I love your energy. I want to grow up like you. I want to be like you one day. Thank you so much for having this chat. I had the pleasure of meeting you in person. You gave me a tour of NYSE. That was one of the really, really amazing moments of my life. Our community loves you. You're an amazing guy, people. I know, if you haven't checked out Peter's course, you should definitely do that. And I'm looking forward to talking to you for many years to come. I'm learning a lot from you. Thank you so much.
I am honored, and I love your community, and I love you. You're wonderful. When I grow up, I want to be like you. And I put out to your whole community an invitation. It's live and it's free. Next Wednesday night, 7 p.m. There's a link at the Wall Street Global WSGTA.com website. It says emergency webinar, register. You must register. Please hit the button. Join us. There are going to be probably 1,000 people. I did a talk at Florida University, FSU, Florida yesterday to 600 young new traders. They're all going to be there. We have a wonderful big community talking about learning to navigate the market successfully. I invite all of the people in the Aziz Bear and Bull Traders group. Welcome.
Thank you so much. I appreciate that. I'll make sure to send an email to all of our followers as well. And have a good evening. You're tired. I'm sure you must be tired. It was a crazy day.
I love you, man. Thank you.
Thank you. Bye-bye.